Based on the historical data and forecast, Bitcoin has shown volatility with a recent downtrend indicated by the forecast for the next week. The RSI values have fluctuated, dipping into oversold territory on January 20th at 39.7, suggesting a potential for a bounce. The Bollinger Bands show that the price is approaching the lower band, further reinforcing a possible oversold condition. Therefore, I recommend a contrarian strategy focusing on a potential rebound. We will initiate a long position at $85,500. A stop-loss order will be placed at $84,500 to mitigate potential losses if the downtrend continues. The initial target price will be set at $88,400, aligning with a recent support level and a reasonable profit margin. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI crosses above 50, indicating increasing bullish momentum, we will consider moving the target price to $91,300. Conversely, if the price breaks below the lower Bollinger Band and the RSI remains below 30, we will tighten the stop-loss to $83,500. This dynamic adjustment allows us to capitalize on the rebound while protecting against further downside risk. This portfolio combines the RSI and Bollinger Band strategies to achieve the most efficient strategy. Based on the historical data and forecast, Ethereum has shown a volatile trend with periods of both upward and downward movement. The RSI values fluctuating between 37.7 and 66.4 suggest that the asset has been both oversold and overbought during the observed period. The Bollinger Bands indicate periods of price consolidation and expansion. Considering the recent downward forecast for the next week, I propose a short selling strategy. The entry price will be $3,170. The stop-loss will be set at $3,400, just above the upper Bollinger Band to avoid being stopped out by a potential short-term upward spike. The initial target price is $3,000, aligning with the forecast price on January 27, 2026. To refine the strategy, we will incorporate RSI signals. If the RSI falls below 30, we will enter a long position at $2,990 with a stop-loss at $3,060 and a target price of $3,310. Conversely, if the RSI rises above 80, we will maintain the short position and adjust the target price to $2,990. This dynamic approach, combining forecast data, Bollinger Bands, and RSI, aims to maximize returns while managing risk effectively. This portfolio is designed to capitalize on potential price declines while remaining flexible to adapt to changing market conditions. Based on the historical data and forecast, BNB shows a downtrend. The RSI consistently fluctuates, but recently dipped to 43.9, indicating a potential oversold condition. The Bollinger Bands show that the price is approaching the lower band, reinforcing the possibility of a short-term bounce. Therefore, I recommend a contrarian strategy focusing on short-term gains. Entry price should be $852. Set a stop-loss at $843 to mitigate potential losses if the downtrend continues. The target price should be $884, aligning with the forecast for January 21, 2026. To refine the strategy, we'll integrate the RSI and Bollinger Bands. When the RSI falls below 20, consider a long position. When the RSI rises above 80, consider a short position. If the price touches the lower Bollinger Band, it signals a potential buying opportunity. If the price touches the upper Bollinger Band, it signals a potential selling opportunity. Combining these signals, I suggest entering a long position at $852, with a stop-loss at $843 and a target price of $884. This approach balances risk and reward, capitalizing on short-term price fluctuations while mitigating potential losses. Based on the historical data and forecast, XRP has been exhibiting a downtrend, with recent support around $1.83 and resistance at $1.9. The RSI readings have fluctuated, dipping below 40 on January 19, 2026, indicating an oversold condition, and then rebounding slightly. The Bollinger Bands show the price has been trading within a range, with the lower band consistently near the support level. Considering the forecast for the next week, which predicts a continued decline to $1.89, I recommend a contrarian strategy aiming to capitalize on potential short-term bounces. My strategy involves a long position entry at $1.92 when the RSI rises above 50, combined with a stop-loss order at $1.89 to limit potential losses. I will target a profit at $2.05, aiming to capture a rebound within the Bollinger Bands. This strategy balances the potential for a short-term price recovery with a conservative risk management approach, given the overall downtrend and bearish forecast. The RSI indicator will be used to confirm the entry, while the Bollinger Bands will help identify the target price and stop-loss level. Based on the historical data and forecast, Solana shows a declining trend. The recent RSI values have dipped below 50, indicating a potential oversold condition, particularly on January 20, 2026, with an RSI of 38.4. The forecast for the next week projects a continued downward movement, with prices falling from $132 to $120. Considering this, I recommend a short position strategy. We will enter a short position at $125. Place a stop-loss order at $128 to protect against unexpected upward price swings. The initial target price is $120, aiming to capitalize on the predicted downward trend. To refine this strategy, we'll incorporate the Bollinger Bands. Since the price is approaching the lower band, it reinforces the potential for a downward movement. If the price breaks below the lower Bollinger Band of $126 on January 20, 2026, consider tightening the stop-loss to $127. If the price reaches the target of $120, consider moving the stop-loss to break-even and setting a secondary target at $118 to potentially capture further gains. This combined approach leverages both RSI and Bollinger Bands for a more robust and adaptive investment strategy. Based on the historical data and forecast, TRON shows a slightly upward trend, fluctuating within a defined range. The RSI consistently hovers above 60, indicating a bullish momentum, though nearing overbought territory. The Bollinger Bands suggest periods of volatility with prices occasionally touching the upper and lower bands. Considering these factors, I propose a combined strategy utilizing RSI and Bollinger Bands for optimal returns. We will initiate a long position when the RSI dips below 40, signaling an oversold condition, and the price touches the lower Bollinger Band. Specifically, we will enter a long position at $0.283, coinciding with the recent touch of the lower Bollinger Band and a low RSI of 48.0. Our stop-loss will be set just below the support level at $0.28 to protect against potential downside risks. The initial target price will be $0.31, aligning with the recent resistance level and the upper Bollinger Band. If the price reaches $0.31, we will consider moving our stop-loss to break even and potentially setting a second target price at $0.32, capitalizing on further upward momentum. This strategy combines the strengths of both indicators to maximize potential profits while minimizing risk. Based on the historical data and forecast, Dogecoin shows a declining trend. The price has been fluctuating within a range bounded by a support price of $0.106 and a resistance price of $0.13. The RSI values have mostly been below 70, indicating that the asset is not overbought. The forecast for the next week predicts a continued downward trend, with prices ranging from $0.132 to $0.122. Considering these factors, I recommend a short position strategy. I suggest entering a short position at $0.132. The stop-loss should be set at $0.138, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The target price for this trade should be $0.122, aligning with the forecast price. To further refine this strategy, we can incorporate the Bollinger Bands. If the price touches the upper band, it suggests a potential shorting opportunity, while a touch of the lower band may indicate a potential exit point or a reassessment of the trade. This combined approach leverages both trend analysis and volatility indicators for a more robust investment decision. Based on the historical data and forecast, Cardano has shown a downward trend with a recent dip below the support level of $0.342. The forecast for the next week indicates continued downward pressure, with prices ranging between $0.346 and $0.373. The RSI consistently remains below 50, suggesting a bearish momentum. Considering the Bollinger Bands, the price has been trading within the lower band, reinforcing the downtrend. My strategy will be a short position with an entry price of $0.373, a stop-loss price of $0.386, and a target price of $0.346. This strategy aims to capitalize on the predicted downward movement, limiting potential losses with a strategically placed stop-loss. To refine the strategy, I will incorporate RSI signals. When the RSI falls below 20, oversold, it may indicate a temporary bounce, but given the overall bearish trend, I will prioritize the short position. The Bollinger Band strategy will be used to confirm the short position. If the price touches the upper band, it might be a good time to enter a short position. The final portfolio will be 60% short position based on the forecast price and 40% short position based on the RSI and Bollinger Bands. This combined approach seeks to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Bitcoin Cash demonstrates a downtrend with significant volatility. The RSI consistently dips below 50, indicating a weakening momentum. The forecast for the next week projects a continued downward trajectory, with prices reaching as low as $548. Considering these factors, I recommend a short selling strategy. Enter a short position at $574, placing a stop-loss order at $583 to protect against a potential reversal. The initial target price is set at $545, aligning with the established support level. To refine the strategy, we incorporate the Bollinger Bands. When the price touches the upper band, it suggests a potential shorting opportunity. Given the current downtrend and the forecast, I suggest a second short position at $570 with a stop-loss at $574 and a target price of $556. Combining these two strategies, the overall portfolio would consist of two short positions, one at $574 with a stop-loss at $583 and a target of $545, and another at $570 with a stop-loss at $574 and a target of $556. This diversified approach mitigates risk while capitalizing on the anticipated downward movement of Bitcoin Cash. Based on the historical data and forecast, Wrapped Beacon ETH shows a downtrend after a period of volatility. The RSI consistently dips below 50, reaching a low of 38.0 on January 20, 2026, indicating an oversold condition. The forecast predicts a continued decline, with prices falling from $34.50 to $32.60. Considering these factors, I recommend a short position strategy. The entry price should be $3,450, capitalizing on the anticipated downward movement. A stop-loss should be set at $3,500 to protect against unexpected upward spikes. The initial target price is $3,300, aligning with the forecast and providing a reasonable profit margin. To refine this strategy, we incorporate the Bollinger Bands. The price is currently near the upper band, suggesting a potential reversal. We will use a combination of the RSI and Bollinger Band strategy. If the price touches the upper band and the RSI is above 70, we will close the position and take profit. If the price falls below the lower band and the RSI is below 30, we will cover the short position and take profit. We will adjust the target price to $3,270, aiming for a more substantial return. This blended approach offers a dynamic and adaptive investment approach, maximizing potential gains while mitigating risks. Based on the historical data and forecast, Sun token shows a slightly decreasing trend with support at $0.0198 and resistance at $0.0204. The RSI fluctuates between 47.3 and 63.2, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering the forecast prices are consistently below $0.02, and the RSI is approaching oversold territory, a short position is warranted. The entry price for this short position will be $0.0202. The stop loss will be set at $0.0207, just above the recent resistance level, to limit potential losses if the price unexpectedly rises. The target price will be $0.0196, aligning with the forecast price and providing a reasonable profit margin. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 20, it signals an oversold condition, strengthening the short position. Conversely, if the RSI exceeds 80, it suggests an overbought condition, prompting a re-evaluation of the position. If the price touches the lower band of the Bollinger Bands, it reinforces the short signal. This combined strategy offers a more robust approach, balancing the trend analysis with technical indicators. The final portfolio will be a short position with an entry price of $0.0202, a stop loss of $0.0207, and a target price of $0.0196, with adjustments based on RSI and Bollinger Band signals. Based on the historical data and forecast, IOTA has exhibited a downtrend since January 7, 2026. The price has been consistently declining, with the forecast indicating continued downward pressure. The RSI values have been mostly below 50, with recent readings around 36.8, suggesting the asset is currently in an oversold condition. Considering the Bollinger Bands, the price has been trending near the lower band, indicating potential for a bounce, but the overall trend remains bearish. Therefore, I recommend a contrarian strategy focusing on short-term gains. My strategy involves a long position with an entry price of $0.081. The stop loss should be set at $0.079 to protect against further downside risk. The initial target price is $0.085, aiming to capture a rebound from the oversold condition. If the price reaches $0.085, we will move the stop loss to the entry price of $0.081 to secure profits and protect against a potential reversal. The final target price is $0.090, capitalizing on a potential short-term upward movement. This strategy combines the oversold RSI signal with the Bollinger Band's lower band proximity, aiming for a calculated risk-reward ratio. Based on the historical data and forecast, World Liberty Financial shows a slightly downward trend, although it has been fluctuating. The RSI indicates that the asset is currently in a neutral range, but has recently entered an oversold territory on January 20, 2026, with a value of 48.8. Considering the support price of $0.155 and the recent dip, I propose a long position strategy. The entry price will be $0.161. Coinciding with the forecast price on January 26, 2026. The stop loss will be set at $0.155, right at the support level, to limit potential losses. The target price will be $0.183, based on the historical resistance level and the upper Bollinger Band. To refine this strategy, we'll incorporate Bollinger Bands. When the price touches the lower band, it signals a potential buying opportunity. The forecast suggests a price around $0.161, which is near the lower Bollinger Band, reinforcing the buy signal. Therefore, the strategy will be to enter a long position at $0.161, with a stop loss at $0.155 and a target price of $0.183. This approach combines RSI's oversold indication with Bollinger Band's volatility signals to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Bitcoin Cash demonstrates a downtrend with significant volatility. The RSI consistently dips below 50, indicating a weakening momentum. The forecast for the next week projects a continued downward trajectory, with prices reaching as low as $548. Considering these factors, I recommend a short selling strategy. Enter a short position at $574. Placing a stop-loss order at $583 to protect against a potential reversal. The initial target price is set at $545, aligning with the established support level. To refine the strategy, we incorporate the Bollinger Bands. When the price touches the upper band, it suggests a potential shorting opportunity. Given the current downtrend and the forecast, I suggest a second short position at $570 with a stop loss at $574 and a target price of $556. Combining these two strategies, the overall portfolio would consist of two short positions, one at $574 with a stop-loss at $583 and a target of $545, and another at $570 with a stop-loss at $574 and a target of $556. This diversified approach mitigates risk while capitalizing on the anticipated downward movement of Bitcoin Cash. Based on the historical data and forecast, SKY demonstrates a slightly upward trend, fluctuating within the support of $0.0557 and resistance of $0.0647. The RSI consistently hovers around the mid-range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show periods of volatility, with prices occasionally touching the upper and lower bands. Considering the forecast data for the next week, the price is expected to remain relatively stable, fluctuating around $0.0625. Therefore, I recommend a moderately bullish strategy. We will initiate a long position when the price touches the lower Bollinger Band, which is $0.0554. The stop loss will be set slightly below the support level at $0.0547 to protect against unexpected downturns. The target price will be set at the resistance level of $0.0647, aiming to capture the potential upside within the established range. To refine the strategy, we'll incorporate RSI signals. If the RSI drops below 20, oversold, we will enter a long position at $0.0554, with a stop loss at $0.0547 and a target price of $0.0647. Conversely, if the RSI exceeds 80, overbought, we will consider shorting the asset, but given the overall upward trend, we will prioritize the long position. The portfolio will primarily consist of long positions triggered by the lower Bollinger Band and confirmed by the RSI, offering a balanced approach to capitalize on the prevailing market conditions. This strategy combines technical indicators and price action to maximize returns while managing risk effectively. Based on the historical data and forecast, just shows a fluctuating trend with recent consolidation around the $0.04 mark. The RSI indicates periods of both overbought and oversold conditions, currently hovering around 55.7, suggesting a neutral to slightly bullish momentum. The Bollinger Bands have been narrowing recently, indicating decreasing volatility and a potential breakout. The support price is consistently at $0.0404, while the resistance is at $0.0447. Considering these factors, I recommend a breakout strategy. We will initiate a long position when the price breaks above the resistance level of $0.0447. The entry price will be $0.0447. The stop loss will be set just below the support level at $0.0404, specifically at $0.0401 to allow for minor fluctuations. The target price will be set at $0.047, aiming for a substantial gain. To refine this strategy, we can incorporate the Bollinger Bands. If the price is trading near the lower band and shows signs of bouncing back, it could signal a potential buying opportunity. However, given the recent consolidation and the forecast indicating a gradual increase, the breakout strategy remains the primary focus. The portfolio will consist of 70% of the breakout strategy and 30% of the RSI-based strategy. This allocation balances the potential for significant gains with a degree of risk mitigation. The RSI strategy will involve entering long positions when the RSI falls below 30 and exiting when it reaches 70. This will provide additional opportunities to capitalize on short-term price swings while the primary focus remains on the breakout above the resistance level. Based on the historical data and forecast, the sandbox shows a clear upward trend, particularly with the recent surge to $0.15. The RSI consistently fluctuates, but the recent values above 50 indicate strengthening momentum. The Bollinger Bands also suggest an upward trajectory, with the price frequently touching or crossing the upper band. Considering these factors, I propose a long position strategy. We will enter a long position at $0.134. The stop loss will be set at $0.13, just below the support level of $0.12, to protect against potential downturns. The initial target price will be $0.141, aligning with the forecast and the upper Bollinger Band. To maximize potential returns, we will implement a trailing stop-loss strategy. Once the price reaches $0.141, we will adjust the stop loss to $0.138. If the price continues to rise, we will further increase the stop loss to $0.14, and finally, we will set the final target price at $0.15, near the resistance level. This approach allows us to capture significant gains while mitigating risk. The RSI suggests that the asset is not yet overbought, providing further confidence in the upward trend. This portfolio combines technical indicators and price action to achieve high returns. Based on the historical data and forecast, LayerZero exhibits an overall upward trend with increasing momentum. The price has consistently bounced off the support level of $1.67 and is approaching the resistance level of $2.43. The RSI values have generally been above 50, indicating bullish sentiment, and have recently entered overbought territory, suggesting a potential pullback before further gains. The Bollinger Bands show that the price is currently trading near the upper band, reinforcing the bullish trend but also signaling a possible short-term correction. Considering these factors, I recommend a long position with an entry price of $1.78 on January 21, 2026. To manage risk, set a stop-loss order at $1.71, slightly below the recent low and the lower Bollinger Band. For the target price, I anticipate a move towards the resistance level of $2.43, offering a substantial profit potential. However, to secure profits and account for potential short-term corrections, I suggest a first target price of $1.95, aligning with the forecast price for January 27, 2026. If the price breaks through $1.95, consider trailing the stop-loss upwards and setting a second target price near the resistance level of $2.43. This strategy combines trend following with risk management and profit-taking techniques, aiming for high returns while protecting capital. Based on the historical data and forecast, PAX Gold shows a clear upward trend. The price has been consistently increasing from $44.70 to a forecast of $5,080, supported by rising RSI values. The RSI has crossed above 70 multiple times, indicating overbought conditions but also strong bullish momentum. Given the forecast, I propose a long position strategy. We will enter a long position at $4,780. To manage risk, we will set a stop loss at $4,700, just below the recent support level and the lower Bollinger Band. The initial target price will be $4,960, aligning with the forecast price and a reasonable profit margin. To maximize potential returns, we will implement a trailing stop-loss strategy. Once the price reaches $4,960, we will move the stop-loss to $4,800. If the price continues to rise, we will further adjust the stop-loss to maintain a secure profit. The final target price will be $5,080, based on the forecast. This strategy combines the momentum of the upward trend with risk management techniques to achieve high returns while protecting capital. The RSI and Bollinger Bands confirm the upward trend and provide clear levels for entry, stop-loss, and target prices. Based on the historical data and forecast, Axie Infinity exhibits a strong upward trend. The price has significantly increased from $0.95 to $2.09 in the past 2 weeks, and the forecast indicates a continuation of this trend, reaching $2.11. The RSI consistently remained above 50, indicating bullish momentum, with spikes above 80 suggesting overbought conditions. The Bollinger Bands have widened, confirming increased volatility and a potential for further price movement. Considering these factors, I recommend a long position strategy. Our strategy involves entering a long position at $1.66, coinciding with the start of the forecast period. Given the strong upward trend, the initial stop-loss should be set at $1.53, just below the support level, to protect against a potential pullback. The first target price is $1.94, aligning with the forecast for January 24, 2026. If the price reaches $1.94, we can consider moving the stop-loss to the entry price of $1.66 to secure profits. The second target price is $2.11, the final forecast price for January 27, 2026. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively.